I want to talk about with you today 6 option reports that I use on a daily basis, that I look at on a daily basis, right? Whether I use them or not, well, it depends on what I see on the report. So the 6, when I'm looking at options and I'm looking at stocks as a trader, these are the 6 reports I look at. Number 1, I look at option volume, and I'm looking for high volume. So I want to look at trading activity on calls and puts of any security or ETF. When I see high call or put option volume of 10,000 contracts or more, this could lead to momentum on the stock, right? So I'm looking at calls and puts, top name stocks, looking for 10,000 contracts or more. Open interest? Well, that's the current amount of activity for calls or puts of a security, either long or short. It means if I've bought call options, I'm now interested in where they're going. I have an open interest. I have an open position. But if I open sell, if I short option contracts, I'm also openly interested, and I call that open. And that's my version of open interest. The only time I'm not interested in is if I close that position, or I never have it on to begin with. When there's high open interest, it tells us there's a lot of activity on a particular option. That's interesting to look at. Unusual calls. Now, unlike high volume, these are call options of any large security where X number of days back, let's say the last 20 days, they've just done nothing, and all of a sudden something pops in. May not have traded 10,000 contracts, but if we're used to seeing a couple dozen contracts and then all of a sudden 1,500 of them come up, I want to know. I want to see that. I want to know why. Same thing with unusual puts. If I'm looking at put option volume on a stock, this just goes sideways, and all of a sudden it gets a blip on the screen. It's telling me, wait a minute, something's changed about these particular puts. I want to know why. Cheap option IV. Well, that's the cheapest options that are out there when we rank options over the last year. Where were they at their cheapest? Where were they at their most expensive? And I want to see the ones that are down there near or close to their 1-year lows. Finally, expensive options. Literally the same thing. I'm looking at that current IV today compared to the 1-year high and low. And for expensive options, I want to see those ones that are close to the 1-year highs. Now, I go through all of these reports on a regular basis, and I will be talking about the other 5. I'll talk about, I want to get into detail on one, but I want to talk about the other 5 during some different sessions with you. But as of right now, with what's happened in the markets, what's going on here recently, I want to turn my attention to expensive options. These are the top 10 expensive options coming into this week. Before we get into Thanksgiving, and as you can see here, ESTC is at the very top. There's Wix, MMS, UTI, Micron, EWI, BBWI, Target, Sienna, and PSTG at the bottom. What do they all have in common? Take a look at the high implied volatility. This is a 1-year range where we're tracking IVs, near-term IVs on these, and stamping them, time date stamping them. We get the high for the year, we get the low for the year, and then where is it at today? Look at today. It's on the high for ESTC. Look at today. It's on the high for Wix. Same for MMS. Same for UTI. Micron, however, it's not at its high. It's close. EWI, not at its high, but it's close. BBWI, same thing. High was 79.31, low was 35.95. It's at 64.55. Target, Sienna, PSTG, they're all high, but those top 5 or top 4 are at all-time highs. So what I do with this list, when I take a look and I find expensive, I can go through and I can look at each and every one of these charts. And I'll look at the chart and I'll look at the implied volatility. But you know what I like to do to save myself a little time? I'll take this top 10 list and I'll re-rank it. And I want to re-rank it by who's doing well and who's crapping out over the last year. And this is what it looks like. All right, last 52 weeks, when I rank these, Micron Technology is at the top of this list trading at near its yearly highs. Okay? The high price has been $253.30 in the last year, low $64.72. Well, just recently to over 250. I'd say it's pretty close to the yearly high. All the way down at the bottom, Bath and Body Works had a year-to-date high of $41.08, a year-to-date low of $21.96. Look where it's at. It's basically on its year-to-date low. So let's evaluate those two charts, because one is at its year-to-date high and the other's at its year-to-date low, and see if we can find out anything else about these two. So let's start with Micron. Micron actually doubled in stock price. As you can see here, the stock was trading close to 100. It was between 110 and 120, and that was just this summer. Look what's happened to it. $260 very recently before backing off 10 points here in the last day or two. Interesting thing is that as the stock price has more than doubled in value, look at the implied volatility. Down here when it was trading around 110, that IV was trading at 40. Now that IV is at 75. So stock price has doubled. IV has risen. It's nearly doubled in value too. On the other side of the coin, you've got Bed Bath and Body Works. Looks like it's just, I mean, is anybody taking baths anymore? But it doesn't look like with this particular chain, because lower highs, all right, 33, 32, 27. Look where we are right now, 22. Lower highs, lower lows, the trend's going down. The only thing going up is implied volatility. As we go into earnings, it skyrockets, then it plummets. Look what's happening in 3 days. We got earnings coming out again with the stock price trading down here in and around $22. The implied volatility is rising. So putting all this together, what do you do with high implied volatility? You sell option premium, put the probabilities on your side. If you're bullish, that would mean you would use outright puts. If you want to be a little more conservative, you could use credit spreads, because that limits your risk. It also lowers the margin requirement that you would need if you were going to sell the puts outright. Now, if you're bullish on Micron, maybe you're looking at the trend and you're selling that high IV into a bullish trend. However, if you're looking at Bath and Body Works and you're saying to yourself, this might be a value buy, and maybe you do a little bit more work, you look at it versus the sector, then even into the bearish trend, maybe you're looking at it as an oversold opportunity. Or what you could be doing is saying, oh, this is going lower. You could also sell that high V into a bearish trend using something like a call spread. So again, putting this all together, whether you're bullish, like the charts are suggesting with Micron, whether you're bearish, like the charts would suggest with Bath and Body Works, in all of these cases, the option strategy is clear. Sell premium.